Howdy, Jacob here. Today we're looking at Floor Decor Holdings, ticker symbol FND, in the specialty retail industry. They operate as a multi-channel specialty retailer of hard surface flooring and related accessories, and a surface seller in Georgia, headquartered in Atlanta, Georgia, with very incredible revenue growth. I mean, this is next level. 30% at the mid 2010s, 20%. And then most recently, the slowest revenue growth, 3.5%. But they've just been growing like crazy. And their operating margin is up, gross margin is up, return on invested capital is okay, averaging probably, it is a little bit more volatile, but 7.3% the most recent year, but 5 years prior, 6 years prior, low double digits, averaging maybe low teens, 12% or so. And they're really just spending a lot here. Let's see what their majority of free cash flow is. They're just spending a lot on capital expenditures to really grow. And so they haven't really hit as much free cash flow as they have on the earnings side. Because again, this is, I mean, I don't know how I'd compare Floor & Decor to Amazon, but just in this sense of every dollar that comes in, they're taking it to really grow the business. And I mean, they're doing it. They're growing like crazy and they're investing like crazy. So very impressive stuff there. 34 million cash on hand with 2 million short-term debt, 195 million long-term debt. That $200 million debt is less than last year's free cash flow. So not terribly concerned with that debt figure. And this will just be an interesting business to review. I think, I might be a bit too conservative here, but this might be something I'd love to do a deeper dive on because this growth rate is next level for real. So revenue growth, let's say 10%. Let's say they can keep it up, keep growing. I do got to say this, though. The demand for houses and everything was flying over here. And so, maybe they partnered with a builder and the builder's using their supplies. And, the more their demand is, the more the demand for this is. So, if demand for houses, new builds goes down a little bit, then that could be a little bit troublesome, but still feeling comfortable. Let's set that as an assumption. Let's do, again, don't like that free cash flow is more volatile and less consistently lower than their earnings, but let's maybe do 6 and 5%. Maybe that 6% is low. Let's do a little wider range here because, again, that net income is more consistently higher. For share change, 1% for them is about $110 million. I mean, that they'll go relatively flat here, so I'm not concerned by that. P, price to free cash flow. I mean, margins aren't incredible. Return on invested capital is good, but not great. Maybe let's give them 18 P price to free cash flow at the end of this 7-year period, and it needs to fall quite a lot here. So again, maybe I'm underselling this revenue growth. If it can stay at 25%, we're a lot closer. But anyways, I basically am just here to review what I've seen in the past, make conservative assumptions of what I think it's going to do over the next 7 years based on, my understanding of the company and similar to other companies that I've reviewed. And it's looking like it needs to fall quite a bit before we get to the return we're looking for here. But heavy growth company, these are the type of companies you can get at what seems like an expensive price, and they'll kind of fit into their valuation a bit more. But for me, it's still a bit off from where I think it would grow into its valuation. But either way, I hope you enjoy this video and I hope you have a great rest of your day. Thank you.